Hi, everyone. Welcome to this webinar, High Stakes, High Integrity, Decoding the New Era of Carbon Market Maturity. I am quite happy to be joined today by an all-female panel, women in carbon, who have been leading the development and structuring and operation of carbon markets on a high integrity basis. And I will invite them to share a few views about what constitutes high integrity in carbon markets and how we can expect for this to evolve over time. So my name is Juan Carlos. I am the moderator of this panel. I am the Director of Knowledge Policy and Advocacy at Abatable. Abatable is a London-based company who provide integrated carbon market solutions for carbon sourcing and carbon market intelligence. And today, my fellow panelists are Lizzie Coate, who is a partner and associate director of BCG, based in London. Amy Merrill, a person that many of you may know about, the CEO of ICBCM. Julia Carbone, who is a director for Nature for Climate at NCSA, at the World Business Council for Sustainable Development. And before we start, I just want to highlight that we are very pleased to see that close to 400 people have registered for this webinar. Maybe not all will be joining at this moment, but it is great to see the interest in all of you that have registered for this. And particularly, many of you expressed their needs to better understand the market. So we hope that at the end of this webinar, you will come out with a better understanding of what high integrity means and how carbon markets are evolving. And for us to start, and before we go into the panel as such, just to highlight a few points that can provide a framework for our conversation today. Earlier in the year, we as Abatable launched our annual report, which in this case was titled Decoding the BCM in 2024 and Beyond. And one of the things that we highlighted as an important message in this report was the impact of high integrity carbon credits, something that is beginning to be reflected across carbon markets, compliance and voluntary carbon markets that use carbon credits, acknowledging the importance of high integrity. And then the question becomes, what does that mean? And what we see so far is that there is an increased interest precisely in high integrity carbon credits. If we look at the retirements of carbon credits, the volumes that have been retired have been used over the last few years. Lately, we have seen an increase in retirements of credits that align with high integrity considerations, up to the point of reaching 50% of the retirements in 2024. And by high integrity considerations, we mean credits that come from projects registered with CORSIA eligible standards, or with the standards that have been approved for CCP on the side of ICBCM, or also that come from methodologies and projects that have that type of labeling or approval, for instance, of high integrity under the core carbon principles, just as an indication of where is this coming from. Also, what we start to see in the market gradually is that there is a close relationship in between the prices of carbon credits in the market versus the type of quality considerations that are often considered when doing these due diligences of what to buy. For instance, when people start to look at additionality, permanence, avoidance of leakage, risks, and etc., you start to see that prices are starting to capture this nuance, and the higher quality options are becoming better price. So we start to see a price premium in the market. And finally, the new supply is coming precisely from increased funding activity that is surpassing by several times the amount that we see as value of the carbon market, the voluntary carbon markets, in several times. And this new funding is coming from corporates and investors who are committing to participate in carbon offsetting as part of their own mitigation or decarbonization strategies or net zero ambitions. And this funding is going precisely in two directions. One is increased interest in carbon removals, and the second component is also going into nature-based solutions or natural climate solutions, things connected to carbon removals, but also to emissions avoidance. So in that context is that we will start with our panel to discuss what does high integrity mean and what is the new high integrity version of the market. So with this, I will stop sharing my screen, and I will like to start our conversation with Lizzie, Amy, and Julia. And following the an alphabetic order of the organizations, Lizzie, I will start with you, with BCG. As BCG, well, you're a consulting company, you advise corporates in plenty of the thinking around decarbonization strategies, the adoption of targets, and potentially on the purchasing of carbon credits to cover part of their emissions in their trajectories to net zero. So I would like to know from BCG and from your experience as an advisor, but also as a corporate buyer, what are the type of drivers on corporate demand for carbon credits, for carbon offsetting, and for high integrity carbon credits?
So I think one of the big drivers, even of demand, is about getting supply right, which is why we've got Amy from ICVCM here in the room, because setting up what is high integrity and what good looks like is incredibly important for buyers, because they want to know that they're really buying a ton of genuine impact. And so I think, getting those things right. There's also some market mechanisms in place. So there's a lot that's been looked at, the transparency and robustness to ensure that the verified credit goes through the system and can be recognised and doesn't get double counted. And then on the demand side, it's looking at what are these use cases. So what we've seen is a lot of movement lately from governments who are looking at incorporating particularly removals into compliance markets, which has the potential to be really impactful on the market and drive a lot of demand. We've seen a new updated standard draft standard out from SBTI that it's still mid-consultation, still more things to work out, but could have an impact on demand, particularly on the removal side. But there's still a lot more that needs to be done. And I think organisations like VCMI are trying to say, what does a credible claim in the carbon markets mean? So there's these sort of different channels that are going forwards and more that are still evolving and still early days, such as what's happening around Article 6 and intergovernmental. And I think the more that these different organisations can align together and have similar interoperable standards and approaches that allow for corporates to be able to navigate this space more easily, understand what they need to do and understand what the high integrity credits out there are, the easier it will become for them to be able to participate in this market as well.
So that means that demand potentially driven in part by regulations, countries' regulations, a little bit of the use of carbon credits in compliance systems. So this interaction between the voluntary and the compliance, but also motivated by the possibility of making the right claims around the use, for the different use cases on the side of corporates.
That's right. There's actually been, the vast majority of carbon credits have really been driven by the voluntary side of the market. But if we look at the size of the voluntary carbon market compared to compliant carbon markets are significantly larger, which means if governments, as they're already starting to do, if they could really integrate this and drive those demand and incentive signals, the scale of the carbon markets could grow quite significantly.
Excellent. And as you highlighted, and I will then move now to Amy, Lizzie, as you highlighted, supply is an important component of this. For corporate buyers, anyone who is willing to participate in carbon markets for the different use cases, if it's for compliance reasons or for voluntary ambitions, they need to be able to identify the sources of supply and to trust those sources of supply. And this is, I think, Amy, where ICVCM becomes such an important player in the market. ICVCM is defining the bar of what constitutes high integrity. It's a market-driven initiative. But in that sense, the fact that we are aspiring for high integrity doesn't mean that action has to be delayed until the full supply of high integrity credits is available. So in your view, what needs to happen for this new wave of high integrity supply to come into the market, and what should corporates be looking at?
Thanks, and thanks very much for the invitation to be here. I think, what is high integrity? High integrity, the way we see it in the ICVCM, is carbon markets that deliver on all the 10 fundamentals and the 200 rules under the assessment framework of the ICVCM. So 10 fundamentals at a principal level, crediting programs that meet that and are eligible because of that assessment process against governance systems, registry security, those kind of things. and methodologies that have been assessed that deliver across, things like, robust quantification of emission reductions, permanence, risk management, et cetera, all the way through to things like ensuring prior formed consent is continuous and ongoing, right? So that's what integrity is. And what does it mean to be getting there? And what's really interesting about your report and also about what we're seeing in the market is that since we issued the assessment framework in July 2023, the market has moved itself to that direction, right? And we're in an assessment cycle now where people keep telling us to hurry up. And I'm sure people here on this call would like to see more assessment processes happening quicker. And I assure you, we're working as fast as we can. And at the same time, we're also seeing that the market has already built in alignment towards the CCPs. The core carbon principle assessment process has looked back into the market to the existing inventory, right? And the stats you see about what is and what is not passing the CCP assessment process at the moment is existing inventory that was issued before the rules were put out. But what we see for pipeline project development, investment, project developers is they are all choosing to align their project design, the methodology choice, the program they're using, the entity they'll invest in towards the CCPs, right? So it's becoming a buyer condition, it's becoming an investment condition. And we're hearing that across the supply chain. And so what that means is the market has already taken up the challenge of coalescing behind the new high integrity market, right? 98% of the programs by volume are already under our supervision. All the rest that have actual active projects are in our assessment chain. And so that journey has already had 2 years of effort. And, those of us who've been in this space know it takes 2 years to design a project. It takes even longer to issue. So what we are seeing right now is this market in this phase of transition. We're winding down all that old stuff that wouldn't meet the CCPs. We're seeing people buying that, retiring it, parking it, taking a haircut and transitioning it in certain methodologies. And we're seeing this new investment cycle begin where everybody, and your report kind of backs this up with some of the stats that, we're seeing new trends, new methodologies. And I think, so that's a really interesting phase we're in where we're already seeing that the market has shifted its behavior over the last 2 years. And our assessment process continues to filter for that. And the pipeline should be on average much higher integrity because it's been designed to meet that higher integrity bar.
And I think one of the challenges in understanding all of that precisely, as you are explaining and summarizing, is what happens when countries or some countries decide to pull out of all of these things. There is a question on the chat. What about the skepticism that exists because someone pulling out of these commitments, or the type of questionings that come from the greenwashing concerns that come into the market? So from the perspective of ICBCM and all of the effort on the assessment, what should corporates be thinking about all of that? How should they take this information? And what is the noise in between the core things that people should be worrying about?
Yeah, and it's a great question. I mean, the science hasn't changed. The politics might have changed, but the science hasn't changed, right? And any corporate that is looking at its business risks is going to need to be decarbonizing. And there is really no credible way of talking to your shareholders otherwise. I mean, head in the sand is not meeting your fiduciary responsibilities, right? It's kind of simple. So if you look at climate as a risk issue, which is what it is for most business, then you have to be having a credible decarbonization plan, and you have to be using the tools you have to set that plan, deliver what you can, and it's better to do something than nothing. So you should be compensating on the way with high integrity carbon credits. And Lizzie referred to some of the initiatives that are in the marketplace at the moment about the way in which you decide what the right use and appropriate role is. And so, in many parts of the world, the noise from other parts of the world just isn't getting through, and everybody's talking about getting on with delivering integrated systems. We're working with a lot of governments to help create that enabling regulation around using high integrity supply for compliance use, but also for corporate action use. So there's a coalition being led by Singapore, the UK, and Kenya to put enabling regulation in place in increasing numbers of countries to help corporates understand that acting is better than not acting. And, you know, what is greenwashing about? Greenwashing is about using credits that aren't credible. So we're solved for that with CCPs in ways that aren't credible. And we're solving for that with regulation and with a better understanding from organizations like VCMI as to what credible use cases look like. So I think, you know, if there's a message, it's that is 3-4 years ago, and we are now in a space where we have the tools we need. We still know the science, and it's really time to get back in the market and use the initiatives that governments are recognizing, like the CCPs, as a way of doing your due diligence, as a way of protecting yourself from risk. And that's the point of the core carbon principles, that you don't have to be a world expert in understanding methodologies of carbon to be able to buy carbon credits, because you can use a core carbon principle labeled credit.
You can rely on that, no? And I think a key point precisely on what you described now is the science hasn't changed, no? The science tells us already what to do. And I would like to use that idea to pivot into Julia, because Julia, you are looking at the space of nature-based solutions, natural climate solutions. And typically, what we see in relation to carbon projects and carbon credits is that, yes, everything is about counting the tons of CO2 or tons of CO2 equivalent that happens by way of the development of these projects. But then the question is more about what else do we get out of these projects? No, I mean, there is a lot of conversation around the additional benefits, but for many people it's not additional, it's part of the core benefits that you get with natural climate solutions, no? So from your perspective, Julia, what should buyers should be looking at when considering NCS as part of their own decarbonization journey and on offsetting?
Yeah, no, thank you, Juan Carlos, and thank you for pointing out this additional co-benefit versus the core benefits. And I think language is really important in this case. And so I lead the NCS Alliance, which is a coalition of buyers, of NGOs and solution providers that support the use of voluntary carbon market to finance natural climate solutions. And from the beginning, we try to change so in our literature, in what we produce, we avoid, and if you find it, let me know, we avoid the term co-benefits and really put the core benefits back in the center, because actually it's the other way around. The solution is about bringing back biodiversity and supporting communities, and that generates the climate mitigation outcome. That's the entry point to the solutions, because nature-based solutions basically are any intervention that is about protecting nature, improving the management of nature, and restoring nature. We group them separately because there is also a hierarchy in terms of cost effectiveness and precedence in a way, right? And this is a conservation hierarchy. The conservation hierarchy says that it's most effective, not just from a cost, however, perspective, but also from a biodiversity and social perspective, to protect first, rather than waiting until things are degraded or destroyed and then restore, right? But it seems obvious, but it's not always the case how people, function. But then it's not just about protecting, improving the management and restoring. It also has to fundamentally deliver biodiversity gains and social benefits, because these two core benefits are actually the one that will enable the solution to provide climate mitigation on the long term, right? To be resilient. So there is a lot of, biodiversity and conservation science behind it, but, what is important is to go out and look for projects that really have worked on the right premises to ensure that the reduction of emissions, so for example, from removing risk associated to forest degradation, are properly done, or restoration projects are properly done, ensuring that are driven by biodiversity and social and economic contribution for the communities, and the same for improving forest management. But overall, then you see, another thing that we say is, like, a ton of carbon, like one credit, is not equal to another carbon credit, especially when you go and start working on the space of the nature type of credits, because each of them comes with a different story. So yes, we agree that And absolutely, the NCS Alliance supports the ICVCM for disclosure. For disclosure, I'm actually a board member of ICVCM, so totally support it. But we also think it is important for our company to understand where they're buying it, and not, of course, and there is a due diligence aspect, but also from a positive side, right? To be able to understand what are the stories they're connecting with, right? And these stories, we feel like, and this is a little bit the feedback we receive from the companies we work with, is that these stories also help make the case internally to purchase these credits, because they're engaging, they help also the company to actually have a better, I say, even story to tell outside. Now, what is critical, however, also the biodiversity benefits or impacts and the social impacts, also these need to be measured properly, because they can't just be storytelling, right? So that's another challenge we're adding to project developers, that if we really want to push the nature aspect and the social aspect, there is a little bit more to measure than just the climate mitigation outcomes.
Just the tons of CO2. And Julia, do you think that, for instance, taking Amy's point about regulation, what countries are trying to do to shape some of these activities and to shape the type of use cases that you may see, but also as part of that regulation, you may have either metrics, you may have a prioritization of ecosystems, you may have different things that end up influencing either the choice of supply that comes into the market, but also the type of demand that materializes at some point. Do you think that regulation can play a significant role in that sense?
Yes, but
okay.
Depends. So, for example, that's a very, the NCS Alliance is very active now on in trying to influence regulation. So we have, influence is a big word, engage, at least keep track, because we realize how important it is, right? And we know that a good regulation could go miles, right? It could really unlock a lot of potential, but a bad one can really do a major damage. So right now, for example, the most dangerous ones are regulations that will limit the use of nature-based solution removals in, for example, in the choice of companies that want to address their residual emissions. And the residual emission, as you know, are those emissions that will remain at net zero, right? And they will have to be, and I'm using SBTi talk now, neutralized forever and ever, right? The scaling to that is really important, but we can't just rely on tech or novel types. We really need now to make sure that also nature is part of that portfolio, because nature can deliver reduction and removals today. It provides a lower, it creates a lower barrier to entry because they're cheaper. And basically the most important thing, we need nature. Without nature, there is no global net zero. So that's the other very important piece of science that we need to remember, right? We can't solve the climate change problem just with technology. We absolutely need nature. So regulations are going to be really important in giving this signal to companies, saying the types, and without necessarily going into the detail of which methodology, because for things like this, there is ICVCM. So they can reference ICVCM, they can reference Article 6 and other systems, but they can definitely do a lot of good if they signal that we also need nature in the mix, because we can't solve the climate change problem with only one type of solutions.
That's correct, and particularly if it's not yet there at scale. No, I mean we all know that engineered carbon removals is a very promising pathway, but also it's not yet at scale to deliver the gigatons that we need, as part of that global effort to reach net zero. And maybe with this, I would like to go back to you, Lizzie, because BCG, yes, you advise corporates in many different things, and I will not ask you anything about disclosing any of that, but I would like to ask you more about from the perspective of corporate buyer. No, because BCG is quite active in carbon markets. It has committed to do something on carbon removals. It has committed to be clear about its claims. So all of these conversations about the types of, what type of portfolio to prepare for yourself. And in that process, trying to capture the things that are high integrity, which may imply higher costs for the development of that high integrity and potentially higher prices. How are you managing that variety of options for you to have a portfolio that makes sense for BCG, for instance, as a buyer, but also that participates in the process of delivering higher integrity in the market?
So I think partly at BCG, we're really unfortunate to have an incredible internal team that work on this. And we have just published our latest sustainability report a few days ago. So we're doing huge strides forwards on decarbonising all the different scopes of emissions. We are at or above target for those. So that's on the one hand making it easier because we are doing really well along those different ones. And then for our remaining emissions, we are one of the biggest buyers of removals in the market. You'll see on some of those different websites. And we're quite committed to that because BCG as a company is quite committed to decarbonising and also offsetting our impact as well, because we think that sort of and component is really important. And we've tried to be quite transparent and open about the things that we're doing. So we've published, you can find it on our website, that we are moving to full removals by 2030 for our remaining emissions, and that we are targeting a price of $80 per tonne across the portfolio. Now, that is a mixture of different credits that we're buying, and we're pulling that together from trying to support these novel technologies and engineered removals, because to get to the kind of gigaton scales we need in the future, we need to start investing in them now, and we do see that as really important. But to Julia's point, and it is incredibly important that we are protecting nature and having that carry forwards as well. So we have a portfolio that looks at many different credit types and is really looking at, obviously it has to be high integrity, and as I was mentioning, we've got a great team who know the ICVCM principles well, and that are able to look at those and also look at, is this also supporting novel technology? Is this supporting important ecosystems? Looking at that as a holistic credit and trying to have the ones that are going to have really good impact. And I think it's a little bit of an art form beyond just purely science, trying to balance out that portfolio as well.
But it's, I guess, Liz, it's super important, this notion of having a target price per ton of CO2 at a portfolio level, the one metric that gives you flexibility in terms of what do you choose, At which point do you go more for engineered removals or less so, and how much do you incorporate, for instance, MBS removals, MBS avoidance as part of that effort?
I think having the targets in general, so whether this is looking at some of what governments have put out there in terms of putting, the UK's now put out targets for what removals they're trying to target in the engineered space at least. And for us as BCG, we have set those internal targets you can get alignment within the organisation. That means that decisions down the road become that little bit easier. And so we've got a certain price that it needs to meet, but when a lot of the credits that we're buying in advanced commitment offtake agreements. And so there's always an expected date of delivery of those, but that expected date of delivery may not fully materialize. And so you're always going to have to be able to rebalance the portfolio, think about what you need at what time. Also, as our emissions come down, we have an expected amount of emissions in the future, but that will change depending on how effectively we decarbonise internally. So there's all these actually moving parts to it, which is why having a target price, having maybe target methodologies, which for BCG is pretty broad range, but having some of these things decided in advance and socialized internally means that later on, when you're trying to balance things out or you're trying to make decisions, you've at least reduced the option space, and maybe because of the kind of key targets and things you've defined earlier on, you've made all of those future decisions that little bit easier and quicker.
Thank you, Lizzie. So precisely that point of moving pieces and balancing acts, that are important for corporates. And this takes me back to you, Amy. As we all know, ICVCM has this ambitious schedule of assessing plenty of options that exist in the market, in terms of methodology types and so on. And I would say many people out in the market are waiting to see what happens with that, no? When the results are coming out, and whether people should be looking at what ICBCM produces in terms of what becomes CCP approved, or if they should be also using some combination of carbon ratings that exist in the market, no? So with all of these moving pieces and all of these balancing acts, what is your view, Amy? What should be corporates be thinking about when the ICBCM approvals are coming, and how that may change those options for the market?
Thanks. Yeah. And, you know, we've done about half of what will be assessed right now. Yeah. And, you know, by the time people are looking at covering their emissions for 2025 and how to compensate for their residual emissions or their scope 3 or whatever, there should be enough in the market of the CCP labeled credits and enough visible pipeline. You know, right now it's averaging about a 9.5% pass rate. But as we, you know, that starts to become academic very, very quickly, because as new meths without historic volume come in, we will expect the pass rate to go up. And what we are seeing is a really careful design by programs, carbon crediting programs, standards, protocols, registries, whatever you call them in Europe, you know, they have many names. We are seeing them be very aware now of what it takes to get a methodology passed. And so, you know, the thing about the core carbon principles is they are sector neutral, right? So there's a lot of ands in life. There is a huge need to incentivize reductions as well as removals. Yeah. And so there's you know, we're assessing reductions meths. There's still 40 gigatons of energy we need to find mitigation space for. There's carbon credits in there somewhere. Waste has a 1.5 gigatons removal potential, you know, reduction potential. Also, waste and energy meths are going to be really important, as well as removal and nature. And so, you know, what should people be doing? They should be getting familiar with the core carbon principles, with the programs that are eligible, with the methodologies that are in the pipeline. And by the end of September, we're comfortable that you know, that ability to buy and retire for your corporate purposes out to 2030 will start to become, you know, something that you can actually look into the market and see enough volume arising. You know, and so I think that one of the things that we are really trying to get everyone to understand now is that the supply, we now need to move into this further strengthening of supply, because if we look further out, and your report goes to it as well, everybody understands now what high integrity looks like. Everybody can make a responsible choice about ensuring their use of carbon credits is high integrity. There are many ways to do that. Ratings agencies enable corporates with the money to spend for due diligence of that specific kind for that specific project to put money behind that. Those are not generally, ratings are not generally a free service. But what you have now is enough in the market to show you what not to buy and what to buy. And it's good enough. And so the real thing now is, okay, let's get supply incentivized. So if you are now looking at prices and you're thinking about price, high quality prices, we're seeing price premiums in CCP labeled credits from many different agencies reporting this price premium for CCPs. If we expect that to go up, then anybody who knows what they're going to decarbonize over the next 10 years might want to come in at the front end of the market and start investing. And that's where we start to need to see that investment, right? To get supply to be anywhere near what we need it to be, if you assume CORSIA is going to continue to have that demand, and that's a political if, then we all collectively need to now be ready to scale supply at that high integrity level. And so corporates with a potentially large exposure, when they're managing climate risk, they need to also be looking at whether they can come in at the front end of the market and invest. And that, again, the core carbon principles also help with that, because they help you work out what to invest in. So, you know, there's a lot going on, and really, one of the things that we find in ICVCM is there is now a collective endeavor in this market. There wasn't 3 years ago. It was bespoke companies doing bespoke transactions. There is a collective endeavor. There is a threshold for good enough. And that enables corporates to find their way in the market, investing, buying, planning, and anticipating price patterns, because they can look across different sectors, different producers, different generation of carbon market credits, and say, okay, a CCP is trading at this in these sectors, and that gives me a price horizon for how much I need to set aside for that compliance year.
Yeah, and maybe, I mean, some people tend to forget that this type of market-led initiatives, this started only a few years ago.
Yeah,
so it's not something that we have had forever. It's something that is less than 5 years old.
that's right. And it's a stakeholder. You call it market. I call it stakeholder.
Well, stakeholder is that.
Because we have everybody around the table. And I don't know if I've given you my favorite statistic, but last year when we were assessing, we had over 11,000 pro bono hours from the stakeholder community in our working groups. So 11,000 hours of people's time was put into this endeavor from all the range of market actors. So this is the core carbon principles are a collective shared public good, and everybody has been engaged in that assessment process. And so, yeah, I mean, it's a young initiative, but what it is the center point for everybody stabilizing this market so it can grow. And so, if anyone on this call was in one of our working groups, thank you very much. Your contribution was huge, and we'll continue to rely on the stakeholder community to make this collective endeavor work.
And it matters, no? That participation matters. And let me then move to Julia. Julia, precisely because everything that Amy has been talking about, the importance of being able to identify red flags, what constitutes a very good supply, the type of thresholds that we now have in the market, the importance of promising good supply coming soon, later in the year, but also corporates still ask about prices. Even though we are moving into that high integrity market, that this is evolving. Just as Lizzie highlighted, all of these moving pieces and these balancing acts, many corporates are still wondering about the prices and where the premium is coming from, and if they should be paying the premium or investing into that. So from a perspective of NCSA, what should corporates be thinking about paying a little bit more for high integrity to become like an important source of supply in the MBS part of things, not just the carbon removals engineer, but the MBS component of this?
Yeah, so no, absolutely. Well, first of all, and I'm sorry to I don't like to call it premium because it sounds like it's something that you can add on or not. But effectively, this is the
real price. The real price,
right? Is like going back to economics 101. We are now integrating externalities. So all the things that were not included should now be included. Now, there is also the question that there are going to be measures that project developers will have to take in addition to what they were doing before, due to the high integrity requirements. And it will depend on the type of methodology, on the type of ecosystem. Here I'm talking only about nature. And so that means that the cost will go higher, and therefore the price should go higher. I think the big challenge with nature is that it's not an engineer manual that it will say, okay, all REDD+ will cost this much, all the AAR will cost that much, because it really depends where you are, the type of threat, the type of risk. There is, political risk, other risks. So it's going to be really impossible, in my perspective, to standardize the same. In the conservation world, you can't always say, well, a conservation project for restoration costs this much. It really depends where you are, the type of terrain, the type of availability of juvenile trees and so on. So there is a lot of variability in the nature space. But so just to say that what we are trying to say is that the right price, yes, has to be higher, because in addition to the cost of actually doing the action, you also have to incorporate the fair return to the communities. That has to be part of the solution. Otherwise, the solution is not going to be resilient. We go back to the first question, which was about co-benefits versus core benefits. The community is a central pillar for the success, and therefore they have to have a shared benefit, which is also financial benefits, is not just intangible benefits. So all these elements need to be accounted and paid. So interesting, even before ICVCM started actually issuing the CCPs, identifying the methodology that can issue CCPs, we had actually done with BCG. Thank you again, Lizzie. I think an excellent buyer's guide for buying NCS carbon credits, right? And one big discussion we had when we were drafting, it was like, okay, what do we say? Ton for ton is what we are pushing. But what if there is a limited budget, right? I mean, this is a reality of a company. It's great if you can do ton for ton, but if you can't and you have a limited budget, what should you aim? I mean, what should you prioritize? Getting more tons? And our answer was no. Then no. Then you should prioritize having high integrity, high quality, and paying the right price. Even if you are in the end can't buy all the tons that you should buy, right? According to your strategy. Because underpaying will just really destroy the market. Because then at a certain point, yes, the credits that have been issued will be sold, but then the project developer, the community needs enough resources to continue operate and paying the operational part of the project. So that's I don't know how it works for tech type of credits, apart from that, the beginning is obviously the technology is more expensive, but definitely on nature-based solutions, there is a lot of elements that will impact the cost. And I know also with ICVCM, we talked a lot about how do we set that limit? Is there a threshold? We didn't never set a specific amount because they're so variable, right? It's so variable, the risk. But it's more about making sure that you as a buyer get an informed decision about was this, price reflected the real cost.
Okay. And that means, I mean, thinking about this fair price and this fair return, that means that if corporates are just looking at the cheapest option, low price, is a race to the bottom. I
Totally.
mean, really, you are not incentivizing further mitigation. You are not looking to expand the possibilities of what the projects can do, not just in terms of tons of CO2, but actually delivering those core benefits that exist, particularly on the side of MBS. And for instance, a few days ago, as a Betable, we produced a brief piece of research saying, well, we have discovered that for high integrity cook stoves, the type of price that we should see in the market is at least $15 per ton of CO2 and beyond, not the $3, $2, $4, $5, $6 that we are experiencing in some cases. So it has to be 2, 3, 4 times what we see in the market these days. So with that, I would like to return to you, Lizzie. This type of push for fair price, the real price reflecting the real integrity associated to the projects, to the activities. Do you think that has an impact in terms of that target that companies may have? For instance, should BCG move from 80 to 85 to 87 to 90, 93? Or how can you process that? How can you incorporate precisely for the decision making on creating your own portfolio?
I think it's as I said before, it's a definitely more art than science. So I think you have that clear plan, but the speed at which this market changes means that you can't really rigidly follow rules. There needs to be genuine thinking behind buying credits, behind what you're going to do, what you think is best practice. And there is mountains of information available out there now to help and support buyers in that process. Amy and Julia have already mentioned quite a few of them that have been produced by their organizations, and the point is that different organizations are trying to make it as easy as possible to make some of those good decisions and to be able to move forwards to it. But ultimately, you're really trying to look at what is feasible within, getting approval within your company, within getting sign off and actually moving forwards and starting with action. And I think sometimes we have this bias towards perfect being the enemy of good, and we try to get to, huge numbers from day one. And I think there is a case for starting with some action and starting now, because you learn from all of those steps. So this is at BCG, we've done that. I've seen that at countless other companies. That's why BCG now does have a price that is, we're aiming towards the $80 a tonne by 2030, and to move to full removals. We didn't start with that, and we have bought credits, and we have learned, and we have engaged lots of internal stakeholders, and we have been able to move the needle forwards on that. And that is something that we continue to look at, continue to evolve on. There's continually discussions internally of, well, what do we do post 2030? What do we do in other spaces? What types of credits do we buy? These sorts of things. And then even within the smaller elements in that, of when we're buying nature-based credits, like there's a huge array of nature-based removals projects out there with all the different types. There's a huge array of tech-based removals projects out there, and we can't buy all of them. And so there are trade-offs that you inevitably have to make, and that by starting now, investing in that, buying some of those projects, having those discussions, you get better and better at it over time.
Thank you, Lizzie. And I have been monitoring the questions by the audience, and I would like to move to you, Amy, because I guess the elephant in the room in many conversations is, what about this interaction between voluntary carbon markets, this stakeholders initiative, ICBCM looking at a threshold, core carbon principles, and what does that mean? But also the fact that countries are making decisions on their own crediting mechanism under Article 6 of the Paris Agreement. So then the question starts on how things interact, overlap. Are they separate? Can they come together? What is your view in terms of that potential surge in supply on the side of Article 6, if all the rules are not just finalized, but the procedures and the standards come in place, versus what we see happening in the market?
Thanks. And, under the Paris Agreement, countries all need to start shaping their economy back down towards zero emissions, right? And take that trajectory. And Article 6 of the Paris Agreement is designed to help countries use flexible trading of emission reductions and removals between them, right? To meet that goal. And that kind of, every company operates in a country, and somehow, and at the same time, companies need to be decarbonizing because of risk, because of the impacts of climate change, and because of resilience, and because of shareholder value. And so you have independent carbon markets like the ones we've been talking about so far, and you have international carbon markets and domestic compliance systems, like, for example, in Thailand, where you can, project developers can generate a Thai credit and sell it to a Thai company, right? And all of this is a web. In the past, they were separate, right? You could offset your vehicle's emissions by buying some trees from a generator of, credits that were generated from tree growth, right? It's all the same now, because the world is one world, and because everyone's trying to get towards decarbonization in many different ways. 6.4, as we call it, or PACM for the initiated, is a mechanism that operates like an independent carbon crediting program, but under the UN system. And those of you who have been in the carbon markets for a while will know there was a clean development mechanism way back when, in Kyoto times, and it's a similar vehicle to that. One of the things we're dealing with right now in the carbon markets is that all of this needs to be well aligned, and that's my role in leading the Integrity Council, is to make sure that when we are setting our framework, we are looking across to see what the UN has done, and we are aware of what governments are doing domestically, and we're creating virtuous alignment. We are likely to see that the UN crediting mechanism for the next 2 years issues mainly old CDM credits. And I think those of you who are fluent in different types of credits on this call should be aware that those credits would largely not meet the 6.4 rules, let alone the core carbon principle rules, because they are historic transactions, and they're being transitioned largely for international political reasons because of early action under international rules from before. But once we get past that 2-year period of that volume, we will see an array of new supply across all these different systems that will all be, I hope, high integrity, and that all countries can then use however they want. And so we are working with governments that want their domestic program to have a CCP label. So that's really interesting. They want to access international demand by getting an international integrity stamp, as they see it, by going through the core carbon principles assessment process. And we're also seeing independent supply carbon credits being used by governments to meet their obligations under the Paris Agreement. So there were perhaps a few years ago separate markets. Right now, we have supply and demand can be voluntary or compliance. It can be a corporate use case or a tax in a country or an NDC of a country. So the really big thing to take away is that if you're looking at buying carbon credits, you can get comfortable that they are high integrity by looking at where they come from and what systems they've been through. And if you're looking at investing in projects, you also need to know what the market for them will be. Will it be captive, or will it be capable of being sold into different markets? And for me personally, I think it's important that project developers are able to access numerous markets, because that goes back to the price signal, right? If you can sell your credit in many places, you can probably find a place where the price is the best for you. And that also helps with this benefit share pass back, and community projects in particular need to be able to access multiple markets to get the best value for their effort.
So for project developers, it's important to always be on the look of which methodologies, which carbon credit standards have these different type of approvals, or eligibility conditions. For instance, if it's related to CORSIA or if it's related to CCP, ideally work with them or under them. Choose the ones that may constitute and may be seen already as high integrity, and try to develop projects and try to invest into those spaces. And for corporate buyers to do that as well, to look into those spaces and to consider that high integrity is not cheap. It comes at a cost in terms of making sure that this happens actually.
Yeah, that's right. And I'm sure there are project types that don't cost a lot to produce.
Exactly.
But there are certainly project types where fair returns and fair, transparent benefit sharing, etc., are will impact the cost of actually generating and delivering that credit. I think what we really all need to understand is that this is one big emerging set of sale arrangements. There's supply, there's demand, and that merging of all these different markets enables price discovery, it enables efficient transactions, and it enables you to go into the market and look across it in a way that you never could 4 years ago. So it's a good thing that everything is moving towards being high integrity, and we'll watch and see what the Article 6 mechanism does, and whether it joins the high integrity journey in 2 years' time.
Exactly. Excellent. So we are close to the finalization of our session. Julia, I would like for you to give us a high-level statement or idea of what corporates should be thinking of if they are facing this situation of, well, I want to offset or neutralize or reduce something. As part of this decarbonization journey, I understand what high integrity means and what to look at, but there is an element of cost and there is an element of signing off and approval and balancing acts. But from the perspective of NCSA and the World Business Council for Sustainable Development, what is the message that corporates should be hearing from you?
Well, so, and maybe by saying what I'm gonna say, I'm answering also one of the two of the questions. I think we need to take also a step back and think about what is a carbon credit doing for a company perspective, right? I mean, we know what it does in terms of global net zero. And I think we all here because we figured that the voluntary carbon market can channel funding to mitigation actions that would otherwise would not happen. But from a corporate perspective, why would they do this, right? And I think our key message is that the discussion about the use of voluntary carbon credits must go hand in hand with the discussion about your own net zero strategy. And I would say also your nature positive strategy, because actually, and your just transition. And in fact, especially because we come from the perspective that companies should invest in natural climate solution carbon credits, and really make sure that there is a complete fit, right? And then see the carbon market as a way to close gaps, address underperformance, for example, prepare for neutralization, right? What we were actually very pleased to see the openings offered by SBTi, the Corporate Net Zero Standard version 2, which we're finalizing our, response as in CSA, that there are openings. And that means basically when a company starts thinking about, oh, I'm very interested in purchasing this credit. So I would say, wait a second, first ask yourself, why? How do you position them? What is going to be their role? And that also helps then a company to see how much to invest, because it's about scaling removals. Is it about as a temporary action to close a gap? Because first and foremost, companies, their first responsibility is to address their own, emissions, scope 1, scope 2, scope 3, notwithstanding that some of these emissions are terribly difficult to address. And therefore, that's where the carbon market comes, the carbon credits come as a solution. And it's not temporary, because let's not forget that addressing residual emission is going to be an ongoing responsibility for corporates. So the today's residuals are much higher, or we call ongoing, but we will need the carbon credits forever, especially for corporates that cannot have their own in value chain removal technology, right? They will have to rely on external provider. And what the other thing we want to say is that creditizing also is going to be really important, because we need to make sure that other type of transactions also lead to the same high level of integrity. So if it's not a carbon credit, but then somehow they have to be similar in terms of methodologies and in what they deliver. Sorry, long answer.
No, it's fantastic. Thank you, Julia. And I would like to close with that comment, our session. Thank you, Lizzie. Thank you, Amy. Thank you, Julia. It has been fantastic for me to moderate this conversation. So thank you, everyone who joined, and the recordings will become available. And if you have any questions, we will be answering that by email. Thank you all. Goodbye.